Hello and welcome to the Banker's View from Sibos series, looking at all the hot topics here at this conference in Toronto. I'm Joy Macknight, Deputy Editor at the Banker, and I'm joined by Eric Lee, Research Director at Coalition. Eric, thanks so much for joining us.
Thanks for having me.
So what were the main findings of Coalition's most recent Global Transaction Banking League table?
So first of all, I'd like to take this opportunity to provide a little bit background information on this, especially for some of your readers who have not seen our league tables before. So Coalition's league table is compiled on the basis of total cash management and trade finance revenue earned from financial institutional clients as well as large corp clients. So as a result, the key metrics here are the total size of the revenue rather than anything else. It also excludes SME clients as well as retail clients. So there are three major takeaways. So if we aggregate the top 10 global investment banks together, they're actually getting market share this time around as compared to a few years ago, which was the opposite trend. Then looking within the top 10 banks, there clearly we have seen a few American names outperforming due to their very strong cash management franchise. And lastly, from a regional perspective, home buyers still exist, which is a little bit different compared to our investment banking league table.
Okay, you talk about cash management sort of rising again. What's driving that trend?
So there are two main drivers. Number one, high volumes. We are talking about high payment volumes, high clearing volumes, high deposit volumes on the back of very robust economic growth during the first half. Second of all, better net interest margin, which can be summarized as a very good American market, a good Asian market, and a less bad European market.
Okay. What are the main challenges that transaction banks are facing today?
That's a very good question. I could go with the flow talking about the increasing compliance requirement or the complexity of operations and processes or the potential threats from fintech firms. It's a difficult job. And here we are talking about another challenge makes the job even harder. I call it how to live up to the expectation of an outsider. What I meant here is because of the rising interest rate, lots of people expect the cash management revenue to rise. They are correlated, but this is not a linear relationship. Second of all, there are also a lot of pressure for the banks to grow their deposits while maintaining or increasing their net interest margin because of the rising interest rate. Again, these two usually do not go hand in hand. So as a result of that, we will see a lot of challenges, old or new, down the road.
Okay, you mentioned fintechs. Do you think that the transaction banks are taking advantage of what the fintechs can offer and partnering with them? Do you think that's a trend?
Yes, that's for sure. Looking across the industry, it's hard to find any financial institutions who have not been in partnership with a successful fintech or adopting some of their very successful offerings. So a lot of this is to improve the client experience as well as improving the operational efficiency, which is definitely towards the right direction to make a good industry.
Okay, so my last question is, what do you think are the hot topics here at Sibos?
There are clearly a few. So from my perspective, I think the application of various forms of technology into various aspects of the banking industry is clearly an important one. Then the next one is the collaboration between financial institutions as well as between financial institutions and the fintech firms is another important one to track.
Great. Thank you so much for your insights, Eric.
My pleasure.